we say your last name again?
Brasitis.
These are fun,
I don't feel very official.
right? Can you hear me now?
Yeah.
Yes.
All right. So we've got Louise Brasitis with Roxan Coffman Properties and Becca Ponce with Goosehead Insurance.
Yep.
So we are missing Rob Evans with Edward Jones. He is also part of this group, but this is going to be my first firm meeting that we've done. I call them firm meetings because it's an acronym for financial advisor, insurance agent, real estate agent, and mortgage. That's me. And so we meet once a month and kind of talk about industry topics, go over some of the things that are going on just so that we kind of have a well-rounded idea of everything in what I call the financial arena when we're meeting with clients. So this is the first firm meeting that I've done that is recorded. So I'm excited about it. So we're going to kind of keep it hybrid with what we typically do in our meeting and then talk a little bit about some topics and everything like that and hopefully get some content for you ladies and get everything out there in front of our clients. So with that being said, why don't we start with the topic that everybody wants to focus on the most, which is how's the real estate market?
Yes, this seems to be a question I get with family or friends or just meeting. It's great to have different minds to bounce this off of. But overall, I think what the term we're typically seeing is it's normalizing, which for us, in our positions and working with clients is a way to just kind of create some ease and less frenzy around maybe it was what was going on in the past 18 months, 2 years ago. Austin overall, we're still seeing a lot of activity. A lot of people are still moving here. Inventory, depending on where you are in the city versus the county, is a little bit different, but sales are constant relative to last year. Pending sales are actually up. So I think looking at the past 12 months, we have seen the data to prove that it is stabilizing. So while there seems to be a lot of frenzy, some stress around what's going on with interest rates, which we're excited to hear more about from Matt.
Oh, yeah.
It's I think it's just something we're starting to get used to, and using the numbers to back that up. Something we've been saying to our buyers quite frequently is the kind of homes are sitting on the market for up to 60 days, which is certainly frustrating for sellers, but from a buyer's perspective, it's again not as stressful. You're not making as big of a decision to invest in something like a home if you're a first-time home buyer or looking for an investment property. So just a little more patience is something that we're trying to encourage, and for ourselves as well. Just hold our buyers and sellers' hands and get through it.
Well, and for the sake of the data, that technically, I guess, is it has an expiration. Today's August 15th. So I try to be mindful of some of the things that we talk about to make sure that I give out a date because some of this stuff holds up, right? But 60 days on the market, I think I think somebody else had made mention of that, and we haven't seen anything along those lines in at least 24 months?
Yes,
Maybe more?
definitely. Yeah, it's just something that we're seeing. It's been around that number, give or take a couple of days since the beginning of the year. So as we talked about before with rates stabilizing as well, we're getting used to that now, and it's just giving a sense of stabilization versus a constant frenzy of what was going on during the pandemic, the first 12 months after the pandemic.
Now, we as industry professionals might be getting used to it, but how are your sellers taking it?
So that has been, I think, buyers are using it to their advantage. As I said before, they're not having to make as rushed of a decision and having to put in some offer, 10% over asking, and feeling very frantic about making some kind of a deadline in 24 hours. Sellers, it seems like they're getting more used to that now and having more patience. And I mean, granted, depending on what the situation is, it's obviously can be stressful. And it's something like selling your home or trying to offload an investment property or something like that. But it seems like buyers are using it more to their advantage than sellers. But sellers are learning to be patient and hopefully, wait for the right buyer to come along.
So sellers are are becoming more patient, but do you feel like the buyers get it, or are they being maybe a little too aggressive? Just your opinion.
We've had I've worked with some situations where their buyers maybe think that they can give more of a lowball offer, which, if you want to do that, there's certainly nobody stopping you from doing that, but that's been part of the coaching and trying to, be objective and look at comps and be confident to, make sure you're giving your buyer the best advice, because that is probably adding to some of the seller's frustration as well, because we're seeing some buyers thinking they can get some deal when in fact sellers aren't necessarily willing to budge as much as a buyer would like
Well,
to
yeah,
think.
let's unpack that, because that's something that is a topic that I typically try to touch on a little bit. I run into situations, because I'm dealing obviously with buyers with their financing. I run into situations a lot where buyers want to make offers, and I encourage them that before an offer is written, they reach out to me so we can break down the payment and make sure that they feel comfortable with it. And a lot of times I have buyers that'll say things like, hey, here's what we're thinking about coming in and offering. Because I'll ask them, give me the address, and I'll pull it up, and there it is. It's listed. Asking price is $400,000. And I'll typically run everything down at asking price. And sometimes they go, no, 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 no. Run it at $375,000, right? And it's really not my place to have this conversation. But as a real estate agent, you kind of made mention, hey, no one can stop you from writing an offer that's wildly lower than what the asking price is. But what does that look like to a seller? And better yet, why is that sometimes not best practices? Because I think sometimes just treat it like, oh, it's just business. Let's see what they say. Let's come in, $50,000 under asking price, and we'll throw it at the wall and see if it sticks. But what does that look like, and what are your suggestions to a buyer that does something like that?
Yeah, I would say that's sometimes a conversation that I like to have with the other agent, and just try to feel out how much the seller would be willing to move, and trying to get a sense of what their situation is and how motivated they are to sell. As far as best practices go, that's certainly again, depending on the situation, it's not something we're always going to recommend, because we try to go off of the numbers, try to be as objective as possible,
And
and
by the
run
numbers, you
comps.
mean what?
Comps
The
and
comparable sales. Got it.
yes, yeah, I would say comps are a really great way to, when you're dealing with a buyer who thinks that they can get a really good deal, and it's maybe something that you realize is not very realistic. It's good to go back to the numbers and try to remain as objective as possible. And I've just found that in this market overall,
Mm-hmm.
because people get these wild ideas and are frustrated, and we ourselves may be frustrated in some situations, and it's just good to go back to the numbers and
Yeah.
try to find some, tell a story that way, and ultimately let the buyer make the decision of what they want to do.
Sure. Well, and that's one of the questions I don't ask, but I think about sometimes, is like a buyer comes up with a potential number, and sometimes I know it's way lower than what's ever going to happen. And I kind of just ask myself, like, where did you come up with that?
Mm-hmm.
And I like that you mentioned, the comparable sales that have sold recently, because I think that's the right answer, right? Like we have comparable sales. We don't just like come up with numbers out of nowhere, and we have to do that with the sellers as well.
Mm-hmm.
But yeah, it's definitely one of those things that I also think that buyers forget. You've got people in a home that have, raised families, had experiences, done home improvements, and they're like, oh, let's wheel and deal and see what happens. And yeah, there's that's a part of it, but then there's also an emotional aspect where you are offering a dollar figure on something that is, part of the family.
Yes, more to it than the dollar amount they want in a sale price. And that's another great point too. If that conversation we have with buyers, there are other negotiations to be made, right? So if they want to offer something lower, our recommendation is always, okay, let's sweeten the deal a little bit. If you're able to put more down, if you're in a position to have a shorter closing time, if there are other ways to help the seller, we need to meet in the middle and get
Mm-hmm.
this done, as opposed to just trying to skate out with a good deal and
So I
move
guess
along.
back to my original question, is that with your buyers currently, do you feel like you have a lot of, you know, unrealistic buyers at the moment? Are they aggressive? Are they kind of normal? What seems to be just the blanketed statement in this market right now?
I think they're most of them are realistic in the sense that
They
they
get
want,
it.
yeah, they get it.
Okay.
And kind of going back to where we were a year ago and seeing that this is not a short-term trend. This is something that is starting to stabilize. I know I keep saying that word, but that's what it feels like.
Sure.
And I think buyers and sellers are getting that. So it's kind of now getting to this point where they're realistic and they want to find the right home and be in the right situation financially and not necessarily stretch and
Right.
just figure out the right thing.
Right on. Well, I have to move on to Becca only because I think this particular podcast is putting us probably right around 25, maybe a little over 25. And we've been doing this now for, almost 2 months. And I have yet to have an insurance agent on because I have just been waiting for you to get in here.
We've been busy.
So we wanted you to be the first. And so I'll pass it off to you to kind of give us a general market update in regards to insurance. And then I have a ton of questions in regarding insurance because, well, I haven't had the opportunity to ask anybody. And for the record, and we'll cut this part out, but remember, you're not answering these questions for me. 8 out of 10 times I might know the answer. You're answering this question for the people out there that want to troll us in our industry. So when we look at the data, people are like, what's the data, the comparable sales? Like, make it bite size.
Well, insurance has definitely been very busy lately. We've had the most volatile market, I would say, probably in about 40 years, just based off of, sales and records and home sales, mortgage rates. Texas also has been very California-like lately, I would say. We've had a lot of wildfires.
Oh, I thought you meant like with the people. I was like, boy, you're
well,
really going for it.
There's a lot of them here too. Maybe they brought all of these with them. But yeah, there's been wildfires left and right. We've probably had at least 8 within our, little bubble of 20 miles within the last 2 months. The price of houses, as you know, have just skyrocketed. So, we have to keep up with that. The cost of lumber has gone up. It was $8 per piece, and now it's $36. So people aren't understanding really, how much it takes to rebuild a house, just how much their house is worth right then. So there's been a lot of tough discussions with people, a lot of very big rate increases. But it's, it's insurance. You have to have it. It's going to cover you in a loss. And sometimes I have to break it down for people and, just say, hey, yes, this is more than you've ever paid for home insurance, but this is the most your house has ever been worth.
That's a good point.
And, personally, I don't think paying $2,000 a year for $500,000 of coverage is terrible, Auto rates, though, have been obviously skyrocketing, and, that kind of puts a bad taste in people's mouths right now. We've had a lot of carriers pulling out of the market completely. There's really big, carriers that have lost record amounts in 2023 already. So just kind of dealing with the day-to-day, on the way over here, I got a notification that one of my big carriers is not taking any new business anymore. So, it's definitely been interesting, and keeping everybody kind of educated about where the insurance market is right now, because obviously, as you know, you have to calculate that into, your mortgage payment.
Yeah.
You have to think about that on the home side, budgeting wise. So it's definitely been a lot of education lately. Definitely a lot of education.
So while you're doing the educating, I mean, I'm not an insurance agent, obviously, but as you pointed out, I have to, include the insurance into the monthly payment. And although people deep down, they know that I'm not the insurance company, but it's part of the mortgage payment. So I do catch a little bit of the brunt of it in terms of like, well, why is my payment X amount of dollars? And it's like, well, your insurance is a little higher. When you're having these conversations, I think you did a great job explaining why, these premiums are going up as far as the value of your property, the fact that, let's face it, inflation, the dollar just isn't worth what it used to be. And so everything is more expensive. When you have that conversation, does it seem to hit home, or does there seem to be confusion with the general consumer where they're kind of like, okay, I hear what you're saying, but I don't get it?
I feel like after I educate my clients, it's kind of like, the light bulb goes off. They start to understand. And, people that don't do insurance every day don't see these rates every day. Most people only see insurance rates every 6 months or every year. So the amount of rate increase within that 6 months or that year can be substantial. But I see it, slowly, obviously, and they just see one big kapow at the end of the year. So as long as you, educate the clients, kind of let them know, hey, there's been an unnatural increase of, just population to Texas. There's 1,000 people on average moving here a day. The amount of risks in Texas have gone up. There's been 2 winter storms.
Yeah.
And the first one cost insurance companies $11.2 billion
With a
just
B.
in Texas, with a B, yes. So, unfortunately, I kind of also have to educate my clients and say, hey, insurance also is not a nonprofit.
Right.
We have to gain our, losses back, and the insurance carriers are not even, breaking even right now. They're losing 17 cents per dollar.
Okay.
Yep. So, it's not very good margins, losing 17%. So it's hopefully going to kind of even out, and become a little bit more normal once, prices are starting to kind of normalize. And, auto rates, those have been just skyrocketing
Mm-hmm.
because of things completely out of our hands, I don't know if y'all have heard the TikTok people. They have taught a bunch of other teenagers how to steal Kias and Hyundais.
Oh.
So they can go into a car, plug this USB in, and steal a car within like 3 minutes. And
Okay.
I believe the parameters are 2012 to 2021.
Careful.
Hyundais
Don't
and
tell us too
Kias.
much. I don't need anybody stealing a car because they got the information from this.
Right. Well, and that's another thing is, you have to look at now the makes and models of your
Mhm.
clients. It's not even just, hey, can I get you a better rate? It's, hey, what kind of car do you have? Because there's a lot of carriers that won't even take those anymore. So it's definitely been an interesting underwriting ride lately.
Mhm.
But, it's supposed to get a little bit better.
Well, I'm glad that you brought up underwriting because one of the things that I run into on a semi-regular basis is that I deal with real estate agents actually that as I'm giving kind of quotes and breakdowns of payments and everything, because sometimes agents will say, hey, just send me the breakdown on this property. I'm going to forward it over to my client. And I get pushback from time to time on the insurance side. And so what would you say to a real estate agent who basically is like, yeah, I'm looking at this property. It's currently, we're going to ask $400,000 on it. And you're saying that the premium is going to be anywhere between like $1,600 to $1,800 a year. But I have a house that's way nicer and it has a pool and it has this and it has that. And I'm only paying $1,200 a year. Why are you coming in so much higher? What are your thoughts on that?
Well, you have to look at it. I, first ask, hey, are you their next door neighbor?
Right.
Because that's the only way that you're going to get a similar rate
Mm-hmm.
and have a, nicer house or whatever they're kind of coming at you with, their objective and that. But, there's a big difference just in our area in Central Texas and just particularly in Austin of how everything is rated around Austin and Georgetown, Round Rock. Williamson County to Travis County are completely different risk factors.
Okay.
Hayes County to Travis County are different risk factors. There's a lot more flooding in Hayes County, where in Austin we see a lot more hail. And then Georgetown, we just see kind of a little bit of both. In Williamson County, we have Salado up there that's become kind of a new tornado alley of Texas. So it definitely depends on your zip code, the crime rate. Definitely, not only auto depends on the crime rate, but also your home because theft is, obviously covered.
Sure.
And so I would just say it definitely has to do with exactly where you're at, not just, hey, I'm in Austin, you're in Austin too. Why don't we have the same rate?
Right. And then is it, do people that have current coverage who've maybe been with the same company for a year or two, is it possible at the moment they have a lower rate just because of, I don't know, they've been with that company longer? Or is it maybe possible that that person may not have updated insurance information? Maybe their coverage is way lower. I don't know. What are your thoughts on that?
I feel like I'm the bad guy a lot of the time when I tell people it's not smart anymore to stay with a carrier. They're not giving a ton of loyalty, to people staying as much as they were. So, our parents and grandparents had that, local agent that they went to. It was a captive carrier, one-stop shop. That's who they went to. That's who they went to church with, and so on. But now that's not being rewarded at all. You need to shop your rates. You need to go to a broker. You need to be educated in what's going on. You need to be educated in what your policy actually covers also, because it's not hard, but it's your stuff and it's your valuables. It's your home. Like
Sure.
we were saying, there's a lot of emotional ties to homes. So what happens when, a wildfire starts and it burns completely down? You want to rebuild that. So it's good to know, hey, do I have enough to rebuild right now from ground up? And a lot of people think, oh, that'll never happen to me. That'll never happen to me. And I tell my clients all the time, they're accidents for a reason. I've never planned an accident. Have you?
No,
So,
not
it's
one that involved me.
right. Exactly. So, yeah, it's just educating has just been very, very top of the priority lately.
I gotcha.
Instead of just being like, hey, I beat your rate, let's go, continue on. It's more of, hey, this is exactly how you're going to be covered if something happens. This is how much you're going to have to come out of pocket if something happens, because there's a lot of people who don't have a lot of savings anymore with the inflation and everything else going on, mortgage rates going up, housing rates going up. We have all, a little bit tighter pockets
Yeah.
lately. So I, try to tell people, hey, you don't want to go with that 5% deductible. You need to go with something a little less. $200 a year is going to be the difference of you coming up with five
Right.
grand. That's big. So it's been a fun start to the year, halfway through, still kicking.
Louise, any questions you want to ask an insurance agent?
No questions. The education piece I think is huge. Just from my personal experience and also working with clients, it's kind of going down and breaking down the numbers. We looking at a policy renewal we were working with a client. It was something high, and they were a little put off by it. And then once we spoke with the agent and went through and said, this is what this covers, and do you want to take that part off or not? And you realize, like, I want to be covered ultimately. You don't want to expose
You mean you get what you
yourself.
pay for?
Yes, I mean,
Shocker.
Imagine that.
I think that's sometimes hard to see the big picture, but when you break down the numbers and see, like, you don't want to be exposed to certain types of water coverage, flooding, and different things. I remember going through thinking, I think you probably want to not leave those out, just
Yep.
because it's a little bit goes a long way.
Yeah, it's definitely good to go line by line down your policies. And if you don't know what's on your policy, call your agent, call your broker, whoever you have, and sit down and talk to them about it, because we love to educate people. I love to talk about insurance. It's probably annoying to everyone else around me, but
Boring, maybe. Not
Yeah.
annoying.
yeah. Annoying right now, I think, because nobody likes to pay the rate that they have.
Right.
But yes, definitely a boring subject, but something that you definitely need to know about, and to go through. And like you were saying, those water coverages, those flood coverages, most of those are optional. So you have to make sure that you're covered.
I got you.
Yeah.
Any kind of public service announcement for your clients, Becca? Like tips, tricks, or
Not your rates going up. No, I'm just
right.
kidding.
Well, I guess what I'm getting at is, like, I find myself having almost like a common theme, right? There's always like something that's going on in my business every 90 days. Like sometimes, just to be cliche, like sometimes people are taking out credit cards right before closing, or maybe someone buys a car. No joke, common theme. I'm having a lot of people that are quitting their jobs before closing. Now, don't get me wrong, they're getting better jobs before closing, but they're not telling me, and we're finding out like a week before closing. And then when I reach out to them and I'm like, hey, we just contacted your employer for your final verification of employment. They just said you don't work there anymore. And they're like, oh, yeah, I've got a new job. And this actually happened last week. The woman said, I sent you the pay stub. I'm like, we just get an updated pay stub. Like, we're not going over it line by line. And of course, I mean, Paycor, a lot of these companies look identical. And there it was. It was like ABC construction instead of like EFG construction. So we figured it all out. But like, quitting your job, if you're going to do it, even if you're going to make more money, like, you got to tell your loan officer. So as a
Right.
public service announcement, in terms of things you're running into present day, is there anything that you're kind of experiencing that you kind of want your clients to know, hey, just for the record, if this, then that?
My biggest, I guess, tip right now would be, if you're going to buy a new car, please call your agent before you buy it. Don't make it, a huge surprise to everybody if your rate goes up, or if it doesn't go down as far as you thought it was going to, because you are re-rated on that car when you add it. And for the home side, I would say, just be realistic. Right now, rates are coming in at $2,000 to $3,000 a year, and that's where it's going to be, and that's where it's going to stay. And carriers are regulated by the state of Texas, so these are not numbers that we're making up,
Okay.
know. We have the Texas Department of Insurance for a reason. All of the rate filings have to be sent to them for every single carrier that offers insurance in Texas. So these aren't undeserved.
Understood. Well, I like the auto thing. I never even thought about that because I have made that mistake before.
Mm-hmm.
Went out, bought a new car, didn't think about the difference. And of course, it was affordable to me and it
Right.
wasn't the end of the world. But yeah, I was definitely like, oh man, I didn't even think about this. Like here I've got a car payment and now I'm paying like an extra $50, $60 a month in insurance because I've got like a newer, nicer car. So that is good information. Louise, on the real estate side, anything you've been running into that you want people to know?
Just one general reminder, and I think this isn't particular to this time, but I do think some buyers have, since homes are sitting on the market longer, there's not as much of a frenzy. People are a little more casually looking, but we are running into more multiple offer situations. So having gone ahead and spoken with a lender, being pre-approved, will save a lot of time, put you in a more competitive position. So I like to, especially with kind of newer clients we're working with, that's something we try to talk about a lot. Like, do you have a lender? We'd love to introduce you to Matt or any of the other lenders that we work with, just to, make sure those conversations are happening.
So to be clear, regardless of your financial situation and how amazing your credit score is and everything along those lines, it doesn't look good to a seller when you're writing offers without approval letters.
Correct.
Gotcha.
Yes. It will never hurt you. Let's
Do you
put it
run
that
into
way.
that a lot?
It depends. I think, we have these conversations where, buyers are trying to figure out how much they want to put down and, what their situation is. So we try to get ahead of that a little bit more.
I feel like I'm running into more situations where buyers are calling me and they're ready to make an offer on a property and they do not have an approval.
Mm-hmm.
And I just kind of think like, wow, like what? That's just not the way to do it, right?
Yeah.
And I'm seeing more of it, and I
Mhm.
think a lot of it is because of I did a whole talk on this, like a scarcity mindset thing. Like you don't want to rock the boat on a potential buyer because you just don't have as many of them. Because when things were really, really busy, real estate agents were just too busy to mess around with a buyer that was like, oh, I'm thinking about buying. Let's look at a couple houses. They were like, are you approved? And when it was like, no, you need to talk to my guy. Would love it to be me. Doesn't have to be. Should be. But, you got to talk to my guy or girl. And people were reaching out way before making offers because their real estate agents were really like pushing them or almost forcing them to because they weren't going to, they just didn't have the time to mess with somebody who wasn't taking things seriously.
Totally.
Where now I'm seeing more of it.
Yeah, and I think that was certainly going on, and then in I would say the past 12 months, there's been a little bit of a kind of
Relaxation.
Yeah, just not as much of that frenzy. I know I keep using that word, but we're starting to get back into reminding clients that would be helpful to have, and just I think it's the education piece too. It's just good to know this is kind of one of the first and most important pieces when you do decide to make an offer and go through the home buying process.
Yeah, for sure. Well, in addition to real estate, which is where I try to keep it mainly, I've been kind of focusing with this podcast on also dealing with people that are kind of entrepreneurial because at the end of the day, real estate agents, you're self-employed. Becca owns her own, insurance brokerage, so self-employed as well, lender. The majority of the people that I have on here are running their own business. So to kind of keep it entrepreneurial and encourage entrepreneurial guests to come on, one of the things I ask is, in this current market, and I'd like to start with Becca, what is it that you're doing outside of the basics to generate new business?
Mhm.
So as an example, it looks like you know the answer right away. I mean,
Yeah, that's been a very, very big focus in insurance right now.
Okay.
Especially on the brokerage side. The brokerage side normally kind of pairs up with real estate agents, mortgage loan officers, and, like you were saying, it's become more relaxed. There's not as much on the market. They're staying a little bit longer. So we don't get that lead flow, like we were when people were buying houses left and right. And, they were like, hey, we just need to get this done, continue on. It's a little bit more of an emotional process now, I would say. And people have time to think and sit about it. So, my personal love for insurance and the brokerage is marketing. I love marketing. I love going out. I love meeting new people. So for me, I offer property and casualty insurance, auto and home, renters, specialty. Every single person that you know that drives a car or has a roof over their head has to have something that I offer. So, going into dealerships. So that's a good one for me. Just going to local businesses. My office is in Georgetown. So it's a pretty tight-knit community. And,
Sure.
going in, introducing yourself to other local business owners also, I feel like gives you kind of an up because they are well connected with their clientele as well. So, you wanted to say, hey, if you don't have anybody for me right now, that's fine. But if anybody talks about insurance, like I want to be the first, go to light bulb in your head when someone talks about it. So I know for your, for homes and mortgage, people aren't, switching as often. And it's a little bit easier for me to get somebody to come in and, give me a chance. I'd say just finding other business owners, to kind of play off of and get tips on, even if they're not in your same, realm of product, is also really good just to hear what they're doing and how they're advertising and how they're getting into the community. And, it's more of a community outreach right now for me. So I would just say getting in.
Well, I like the idea. A lot of times I find business owners will catch them. I'm guilty of this. You wake up in the morning and it's like, how do I get a loan,
Hmm.
right? But when you really break it down, my strongest referral source is going to come from a real estate agent, and the
Right.
reason for that being is because when I meet a consumer, what am I going to say about myself other than how great I am?
Hmm.
And so it kind of just like rolls off of people's back. They're like, yeah, okay, if we need anything, we'll call you. But then when a real estate agent is with a potential buyer and they're like, hey, you've got to call my guy, it's so much better. It fits, it's just a higher quality referral. So I can see exactly what you mean. Instead of going to consumers directly and finding everybody who has a car or a home and saying, hey, let me do your insurance,
Hmm.
going to the people that are in front of those people who are going to just basically tee up a higher quality referral.
Right.
Business owners, car dealerships, all of the things that you made mention of. I really like that because that consumer direct advertising, it's tough. I call it like the triangle of trust, right? Like
Hmm.
it's a lot easier. And that's the other part that's what makes it such a higher quality referral is the fact that I feel like all of us have this like deep, kind of almost like innate person that we become. And I literally relate it to like companies like AT&T and bigger companies that do a lot of phone sales where when you get a telemarketing phone call, even if you maybe were shopping for the service, your knee-jerk reaction is like, I don't need it, and you want to hang up,
Right.
right? Because there's just no accountability there. Like you don't
Hmm.
know who that person is, you don't even know where they are, you know nothing about them, so it's really easy to be like, don't call me again, not interested. But if that person within the first like 3 or 4 words was like, Louise told me to call you, you're immediately like, okay, wait a minute. And your attitude is changing, not only because somebody referred you, but here's the part no one talks about that I think is a big part of it. I don't want to do or say anything that is going to make that person want to go back to Louise and say, wow, I called the guy Matt that you told me to call. What a jerk. Like, what a jerk. So now there's this accountability because
Hmm.
if Louise and I are friends or even acquaintances, the last thing I want is for her to have somebody saying, yeah, I called your guy and Matt's just because eventually we're going to run into each other and she might say, yeah, I thought that this would have been a good fit and I'm sorry, but heard you were kind of kind of
Hmm.
mean to the person that I teed up. So that triangle I think is huge. And so I love that approach.
Yeah, definitely. I think people are more apt to go after experiences than
Hmm.
just sales, right
Yeah,
now.
yeah,
Everything's expensive, but where can they have the best kind of, I guess, pathway
sure.
for people, and once you get that kind of ironclad relationship with that client or with that referral partner too. Everybody is a referral partner for you. At least that's how I look at everybody.
Yeah.
My friends, my family, yes, I love them, but they're also, referral partners for me. And you have to sell that experience because, yes, you can say, hey, I'm going to give you a better rate. But a lot of people don't want to deal with that because they already like their current agent.
Yep.
So if you, sell yourself, which, a lot of people don't like to do, but you have to sell yourself in sales.
Well, I
It's the
mean,
imposter syndrome in us.
right, right. Yeah. No, you're spot on. And again, I mean, one of the things I think a lot of people, you see these memes where it's like, it's hard to make a friend a client, but it's easy to make a client a friend.
Yes.
And so, like, even people that are like friends outside of work, I find are, for me personally, and obviously based on the memes, those individuals are typical or are tougher to turn into clients
Mm-hmm.
than convincing another business professional that, hey, when you know someone that needs my services, like, refer them to me. And I don't know why that is. I don't know if it goes back to the whole triangle of trust thing that I just brought up, but it's like, I know people who have a best friend and it's like, yeah, well, she ended up using someone else. And it's like, what the heck happened? I think it's sometimes just that knee-jerk reaction. And frankly, that your best friend was probably referred someone else,
Mm-hmm.
and there's that like little threesome, whatever you want to call it, that just seems to work so much better in business. Louise, what's the new business development or new business initiative for you?
Very similar to Becca's, very relational, just taking the extra time to make sure we're following up, keeping strong relationships with past clients, I think is a big one. As we know, it's not like people are buying a new home every year. So
Mhm.
keeping that relationship up with former buyers and sellers is huge, and just something we have more recently made more of an effort to stay in kind of in touch with and find creative ways, and just going out to dinner, going to lunch, just doing
Yeah.
things to stay front of mind.
We did a brokerage open house,
Yes, that's right. Yeah,
right?
a nice wine tasting, which was awesome. Yeah, and again, it's sometimes it can feel uncomfortable, but just constantly reminding your friends and family, like, hey, I'm a real estate agent. I know we're friends, but just if you know anybody who's looking to buy or sell, we definitely want to stay top of mind. Nothing. I mean, just from a personal, in my situation, it's I just try. It's easy to not go to the seminars and not go into the continuing ed classes, but this is a great time to do it. Just having a little bit more time and the market being a little bit slower, it's a great way to continue to network professionally with other agents and title companies, lenders, everybody that we do business with.
For sure, for sure. Well, I mean, for the sake of time and for the sake of the sanctity of the firm meeting, I guess I'll speak on the mortgage side of things. So everybody asks me, what's your rates or what are the rates right now? And I always tell people my mom says I'm an 8, but I think I'm more of a 6. But that's just me. Um, we Louise and I were talking about this before we got on, and I think that we really haven't seen much of a difference. Again, with it being August 15th, I mean we've been seeing things hover in that high 6, low 7% range, and it's nothing major. That if you're literally thinking about not buying because of anything between a quarter to a 0.5%, I'm sorry, I'm just going to call you out. You're not serious. Any kind of drastic reductions or increases in interest rates, we just haven't seen anything. I looked at the chart since pretty much March. So we're coming up on 6 months of not a lot of volatility. And I've been saying this is that I think if we can get to a point where we experience 6, 7, 8, ideally 9 months of where it's somewhat consistent, doesn't matter where the rate is, right? I think you're going to find that there are going to be people that are going to ultimately just, for lack of a better term, just cave and go, okay, like this is where we're at. Do I really want to buy a house or not? Like, is the reason I'm not buying really the interest rates or not? Do I? People ask me, do I think things will go lower? I do. I do. However, we traditionally don't see things go anywhere 2% less than what we kind of see at that higher echelon. So, I've been saying this on a lot of podcasts. My crystal ball is definitely broken. But if you're waiting for interest rates in like the 2, 3, I would even say 4% range in the next 12 to 24 months, I wouldn't hold your breath. I hope I'm wrong. I like making predictions to where when I'm wrong, I'm right, right? And that's definitely one of them. But I do think that, we, for whatever reason, always seem to do really well in election years, and we've got one coming up here in 2024. And I just think that the one thing we've really been hammering on anyone is people who currently don't own, right? It's debatable if you currently own, and then from there, it's kind of in a case-by-case scenario, but you have a really tough time unless you live at home with your parents and you're literally rent free, coming up with reasons why buying a home isn't best practices. But I think that this is one of the things I said recently, and sometimes I say things and I'm like, man, that was way better than I thought.
Mhm.
I really feel like a lot of what we do in our business, whether, in all of this financial advising, all of it is kind of like a herd mentality where we can come up with, spreadsheets and all this stuff on why it makes sense and it doesn't seem to necessarily matter. And that's the one thing that I think is going to make a difference more than anything. What I mean by that is I've seen instances where interest rates have gone up and then they come down and the general population won't go, all right, now's the time. Iron's hot. Let's strike. They literally all look at each other and 8 out of 10 of them go, let's see if they'll go lower. And they still sit, right? And these are people that, like, I talk to people about their strike point, right? Like, what? Oh, well, we are waiting for rates to come down. Great. What's your strike point, right? And there are people that are like, oh, well, if we could get something in the 4s or the 5s, whatever their strike point is, we make note of it. And then again, doing this long enough, I've seen instances where that strike point becomes available and it's still not good enough. So we talk about the entrepreneurial side of things, and at the end of the day, some of us more than others, because of our business, require more sales. I think as salespeople, really just doing a super good needs assessment is important, because I think there's a lot of people that are telling you that they're not buying because of the interest rates, but it's probably something else. And I would envision that of those people that are, they're not lying. Like, that's maybe one reason, but it's not the reason. If you get to the bottom of what the reason is, I think you'll come to find that it's either, I'll use the 80-20 rule. It's a 20% probability that you're able to handle that objection, and it's an 80% probability that it's just something that is not realistic, right? Coming back to my position, this is why real estate agents and sellers want buyers to consult with me before doing all of this stuff. Is, unfortunately, I don't always get to give good news. And there's nothing more frustrating than running a buyer to 9 or 10 homes only to find out that, like, there was nothing that was going to happen to begin with. And even the buyers, like, they act like they didn't know either. And I sometimes think that, like, when people feel like they're doing something, that they're being productive, it's like, well, I'm so busy shopping for a house. It's like, oh no, you're not getting a house. Like, you are not
Mhm.
getting one. So, as far as, outside of interest rates and things like that, the other thing that I'm seeing a little bit more of, but it's something that I feel like is becoming more difficult, are investors. That everybody wants to be an investor. And I like using my air quotes when I say that, because I feel like there's quite a few different types of investors. You've got your actual investors who this is what they do. They have the money, they have the capital, they know the contractors, they know the real estate agents, and they're doing it. And I'll just use the 80-20 rule again. Anyone who tells you they're an investor, there's an 80% chance they're the other kind of investor, which is like, I own a rental property
Mhm.
and, I want to get into investing. What's the lowest down payment you can offer? And, all of this. And we're seeing, at least on my end, um, with your big lenders like Fannie and Freddie, they're getting very, very tough on the investors, because of the fact that the majority of, or not the majority, but the percentage of investment properties is drastically increasing. And there's some figure that I'd be a liar if I told you I remembered it, but it's over 20%. When over 20% of all of the loans that are out there are investment properties, it puts us in a position where these lenders get nervous, just because it's not good to have a big chunk of home ownership be actual investors. In fact, I read an article, and this was super interesting to me. I read an article that I'm originally from Ohio, and up in Ohio, they're talking about making it, I don't know if the word is illegal, but they're not going to allow for an investor to own more than 50 properties in the state of Ohio. This is to kind of combat people like BlackRock and stuff like that. Texas is a lot larger, but that
Mhm.
was very interesting to me, because Louise and I were talking about inventory,
Mhm.
right? And not that I'm, anti-capitalist trying to get investors out of the market, but we have a huge inventory issue. And so making it maybe a little more difficult for investors to purchase and, making availability easier
Mhm.
for people who want to, actually buy a home to live in, I don't think is necessarily a bad thing. One of the obstacles that I run into on a semi-regular basis, and this will be interesting for you, Louise, is like we talk to people who are filling out applications and, they're telling us that they have intentions of living there, but then through a little bit of investigation, they have no business, or excuse me, they have no intention of actually living in the home. They want to have a rental property, and I swear to God, it's because they saw something on TikTok. And I have had instances where I've had conversations just with people in general, like barbecue talk, right? Where you're with friends and family and someone's like, "I just don't see what the problem is when, why does someone care what I'm purchasing it for if I'm going to make the payments on time and my income can support it and my credit's good and so on and so forth? Like, what's really the harm in it, right?" Almost as if like investors are trying to require higher down payments and maybe higher interest rates because they're just trying to figure out ways to make more money, right? But in addition to the risk that's potentially associated with an investment property, which I am sure Becca can go into on the insurance side, I think what's kind of messed up is here we have investors that are also in the same market as people who are trying to buy primary residencies. So we've got limited inventory. And then, in addition to the people who actually want to live in the house, there's also these investors that already own homes that they live in trying to outbid people who are genuinely trying to live in this home. And I don't know the answer for this, but I just think it's kind of messed up when if you were to think, oh, well, what's the big deal? It's like you probably, Mr. or Mrs. Investor, have a friend, family member, maybe even a daughter who wants to buy a home right now. And you're like, these homes are so expensive. They're so overpriced. Well, isn't it debatable that that's because of the investor? Isn't it kind of sad to think of like a 25-year-old couple that is trying to buy a home and can barely do that? Or furthermore, that has to wildly overpay and have a monthly payment that in the early years of their career is difficult for them to, handle because someone else wants to come in and say, "Oh, I promise I'm going to live here and treat it as my investment property because I need all of these extra homes," and then literally turns around and rents it to the person who's like trying to buy a home.
Right. Yeah, I've seen a ton of that because I'm in that age group. I'm
Mm-hmm.
26, and we have not bought a home yet. I've grown up in Austin since I think we moved here when I was 2. So
Right.
I've seen Austin, throughout the entire expansion kind of what has happened. And there's a lot of homes here that I just would never pay that much for a home.
Right.
I wouldn't do it. I would, it's hard to see where your future is going to be if you're already in Austin and you don't have a home yet,
Mm-hmm.
because that's obviously the goal, for the average American person is to buy a home, have a good job, and retire. So we've been looking, out towards Gerald or out, in Georgetown for, some of the new builds, Hutto, Taylor. So I feel like it's definitely pushing a lot of people out of the market and,
Mm-hmm.
into the outer outskirts of Austin. We're going to turn into kind of the new Dallas Fort Worth kind
Yeah.
of area between us and San Antonio. So I think that it definitely has ruined the market a little bit for people who want to buy. And I have, obviously a lot of loan officers and realtors that are always like, well, why don't you just, let's just try to find you something.
Right.
And, I'm like, okay, well, we have a really awesome apartment in a convenient area and we pay $1,400 a month.
Yeah.
Where can I find a mortgage? And I would go up. For a home. But it's like, that's going to be at least double.
Yeah. Well, and again, I mean, the debate would obviously be that your rent
Oh,
is probably going to go up
paying
as
someone's
well. And you're going
mortgage
to,
and
well,
yeah.
if your rent goes up, you're going to be in trouble. And then if rents are going up, it's because equity is going up. And the one thing that I try to tell people that are in your position
Mm-hmm.
to at least think about is when 2020 hit, and I cannot tell you the amount of people that were making this comment to me when they would, write an offer and someone else would get it, they would basically, I'd say, hey, how did everything go with the offer? And they're like, oh my gosh, they were asking 500,000. We came in at 525,000. We were bidding $25,000 over ask with, a complete appraisal gap waiver and everything like that. And somebody bid $100,000 over asking, right? And the comment that I would get all the time is, who has this kind of money? Well, I'll tell you, that equity that is basically from homes that these people purchased anywhere between 3 to 5 years ago, they don't spend it the same way that a potential buyer is going to spend money that they've saved and invested. And, now it's in a money market account or even just in a checking account. People have a really tough time writing a $100,000 check out of their savings than selling their house and making $100,000. That's like monopoly money to them.
Right.
And so when rates go down or when you do decide that you want to buy, you're going to have to compete with people that have basically bought in, and this is a lot of real estate agents have been telling people in your position. It's like, you're probably right. If you were to buy right now, you're not going to get a dream home. You're not going to get something you love.
Right.
Right. But if you're getting in and the market continues in the direction that it's going, 3, 4, 5 years from now, you're the buyer writing an offer $100,000 over asking, and you're not even batting an eye because part of you is kind of like, I don't even know where this money came from.
Mm-hmm.
So keep that in mind, because that is the only thing that I would say is very debatable.
Mm-hmm.
Because that's the other thing. I mean, what people are like, well, what if these values don't go up? Well, if no one wins, it's kind of all intertwined. So, yeah, food for thought there.
Yeah, it's definitely been interesting to see the growth since 2020.
Can you imagine if you bought a home in 2020? I mean, we're almost into 2024.
Yep.
Mm.
And I think that's kind of where I was at crossroads and why I opened the agency. It was, I was like, okay, I can either put my money into a house, put a good down payment on something. And that was, 2022-ish. So when, everything was still kind of going a little crazy.
Sure.
Or, I can start a business right now. So it's so many big decisions.
Well,
I
at
feel
least
like
you made an investment and didn't
right?
just say, well, I'm just going to rent.
Just going to sit here on it. So it's definitely been a lot of thinking, I feel like, for people my age. You have to, as we go back, have to educate yourself on what's going on. And, I tell people all the time that are in the market, because I used to sell cars, so I understand this, date the rate. The rate, continue. You can never change that sales price. The amount you finance is never going to change unless you pay it down.
Sure.
You can change the rate if it goes down or, different life circumstances. But yeah, it's a lot of education right now. And I feel like it's not out there enough normally.
Well, I think a lot of it's fear.
Yeah.
Here's a good topic that I'll bring up, and for the sake of time, we'll kind of leave with this. But because I have 2 female professionals in here, I what is the word? I attended a seminar that was all about the current buyer of the next 3 to 5 years, and one of the statistics that really, really surprised me is you've got women graduating college at a 30% higher rate than men, right? And so typically education, as you've mentioned, goes hand in hand with income and things like that. And so here the female population is becoming one of the number one kind of lead sources or potential buyers here in the very, very near future. Not only because of graduation rates, but increase with incomes and jobs. And then here was the part that really didn't surprise me, but I was, when I heard it, I went, wow, and I never thought about that, but it sounds so true. Men statistically see more value and see more like fun, if you will, in investing money into things like the stock market and cryptocurrencies and things like that, where women really see more value in investing in homes. It's something that kind of checks 2 boxes where they know they're investing into something that's, financially going to make them more money. But then they also, they get to upgrade it, invest into it, do all of that kind of stuff. And I started really thinking more and more about that. And I'm like, how do we But then they mention that the thing that is holding back this demographic is fear, right?
It's an emotion.
Right, it's fear. So to your point about education, like how do we get in front of more young females and educate them and talk to them about home ownership? Because I mean, you basically meet that demographic at
Mhm.
26. You're right there. I'm thinking about finding the ones that are a little younger. It sounds creepy when I say it that way, but from a home ownership standpoint,
To catch a predator.
right, right. Well, I think we have UT right here, right? Like, think about the
Mhm.
educated women that are going to come out of college. They're going to be making well into six figures, and how do we educate them?
Yeah, I think it's hard too because, historically women have just now become able to, within the last, 50, 60 years,
Yeah,
been able to actually get a home by themselves.
probably 70 years. But yes, I hear
So,
what you're saying.
right, I mean, and we couldn't get credit cards on our own. So
Mhm.
we're, I feel like, a little bit lagging in the education department because of, just, and I hate using this word, but a little bit of suppression.
Sure.
Um, so I think it's more of like an empowering thing, not even an education. Because I feel like when you go to somebody, especially being a man, and you're like, hey,
Yeah.
I'm going to educate you on how to buy a
A
house,
bald white man.
right?
Tell me about it.
It's more of, I feel like we need to take the stance of empowering. How can we empower you to know how to buy a house when you're ready?
Well, I hope people hear
Yeah.
this clip and this conversation. I'm empowering you women. I mean, you're, like I said, with the graduation rates and
Mhm.
everything along those lines, you are our future home buyers. And
We're ready
call
for
us.
you.
Call us. We're ready
We're
for
all
you.
ready for you.
Well, ladies, do you have anything else that you want to touch on before we get out of here? We're missing, obviously, our fourth, so that cuts into our time a little bit. But, any other topics that we didn't touch on that you want to make mention of?
I think so.
All right. Well, before I wrap up, I do this for everybody. Becca, we'll start with you. I want you to look right in the camera and give me your 2-minute elevator pitch.
All right. My name is Becca Ponce. I own a Goosehead Insurance agency. We work with about 30 to 40 different carriers, depending on the lines, to shop your rates and find you the best rate on any Texas insurance that you might have. Commercial, personal lines, all the good stuff. And you also have an awesome agent.
There it is.
That's pretty much it.
Hi, my name is Louise. I'm an agent with Roxan Coffman Properties. We're an independent brokerage based here in Austin. Our team has over 40 years of experience in the central Austin area. We work with buyers, sellers, renters, and investors, and we're here to help you. We are both long-term Austinites with a lot of deep roots here and love our city and are excited to help you find your next spot.
There it is. Thank you, ladies. Everybody out there, call them. All right, guys. You did good.
Thank you.
Oh, is that fun?
Yes, that was awesome.
I'm going to come here every day, Matt.
Yeah.